The affordability story and the road ahead for the economy. Philip Petursson is Chief Investment Strategist at IG Wealth Management. Nice to see you.
Good to be here.
A few things, I guess, to unpack there. Let's start with the housing picture and your assessment of what's happening in Canada right now.
Well, the biggest challenge is that there's a shortage of supply, and we haven't had enough new builds over the last number of years to meet the demand that's been building through whether it's immigration or just population growth overall. So that has contributed to the higher prices that we've seen. So it's running into the higher interest rate environment, and you would think that the higher interest rate environment would be pushing prices lower, but not in a meaningful enough way to keep housing affordable.
It's interesting that we have these different conversations on housing, but not one united conversation. And to see the Prime Minister making those comments reminds me of the fact that I sat down with him for a long interview when he became Prime Minister. And at that time, we were talking about this issue. So this is something that politicians can talk about. But the issue of housing affordability in this country doesn't seem to be going away.
No, and I think in part, first, I'm not a political strategist, so this is just my opinion as a market strategist, but understanding economics, I think one of the challenges is the right hand isn't speaking to the left hand. On the one hand, I think there's a desire to increase the population growth in this country, which is needed for productivity growth and just overall consumption demand going forward. But how are you going to service that population growth in terms of healthcare, in terms of housing, in terms of services that are needed? And those two aren't connecting.
One of the other issues, and our audience obviously likes the numbers and maybe less of the political rhetoric, but that decision to force the grocery makers to provide this price stability plan. But nobody likes paying what they have to pay at the grocery store, but it kind of feeds into a narrative around so-called greedflation, that companies create the inflation mess that we're in right now. And the central bank, the Bank of Canada, which has independence from what politicians think, generally dismisses that idea. They say that we've had an issue where the supply-demand story does not allow for price pressures to ease, and that's what we're trying to tackle right now. So does it make sense for the government to be installing price stability plans from industry if our own central bank seems to be dismissing the idea that companies themselves are causing the inflation?
Yeah, it's an interesting catch-22, and I think what we're seeing is the Bank of Canada is perhaps looking at the overall picture and not looking at it at the micro level, which would be, there are companies that we know that have taken advantage of the inflation narrative to raise prices, whether they're seeing an adjustment in their supply chain or not. And so is there an element of greedflation? Look, I think there is. I know there is because I've seen it in part. And this is where raising interest rates won't change that. That won't change the food supply chain at all, which I actually think is quite healthy because if you go back to 2020, 2021, what you saw was an abundance of corn, coffee, and soybeans, and yet the prices went up. So it wasn't really supply chain driven there. I think, though, the challenge of the government saying to these companies, saying, hey, your profits are too high, figure out a way to cut your profits, goes against capitalism. So I'm not quite sure how they're going to thread that needle.
Okay, well, we'll watch